Measurement after recognition. Now let's take a look at how the asset should be subsequently measured after its initial recognition. Here, Ind AS 16 prescribes us two basic models. First one is cost model. Under this model, an item of PPE should be carried at cost, which is cost minus accumulated depreciation minus accumulated impairment loss. The second model is revaluation model. Under this model, an item of PPE should be carried at revalued amount. Let's see the calculations to be made on date of revaluation. Fair value minus subsequent accumulated depreciation minus subsequent accumulated impairment loss. Friends, when you see significant differences in the fair value arrived at the end of accounting period vis-a-vis their carrying amounts, you must check on regularity of revaluations. The frequency of revaluation depends upon the nature of items. Items having highly volatile fair value must be revalued every year. PPE item having insignificant variation in prices may be revalued once in 3 or 5 years. The accumulated depreciation is to be treated in one of the following ways. Either it is to be restated in proportion to the change in gross carrying amount of the asset so that carrying amount after revaluation equals its revalued amounts. Or it is to be eliminated against the gross carrying amount of the asset and the net amount to be restated equal to the revalued amount. Now it should be noted, if an item of PPE is revalued, the entire class of PPE to which that asset belongs shall be revalued. But revaluation is accounted for an asset by asset basis. However, for different verticals, different models can be selected. A class of PPE is a grouping of assets of a similar nature and used in an entity's operations. Let us now move to accounting treatment of revaluation, which depends upon whether carrying amount is increased or decreased. If an asset's carrying amount is increased as a result of a revaluation, the increase shall be recognized in other comprehensive income and accumulated in equity under the heading of revaluation surplus. However, the increase shall be recognized in profit or loss to the extent that it reverses a revaluation decrease of the same asset previously recognized in profit and loss. If an asset's carrying amount is decreased as a result of a revaluation, the decrease shall be recognized in profit or loss. However, the decrease shall be recognized in other comprehensive income to the extent of any credit balance existing in the revaluation surplus in respect of that asset. The decrease recognized in other comprehensive income reduces the amount accumulated in equity under the heading of revaluation surplus.